This week gave traders a feeling they know too well. Big range, then indecision. We had that wide expansion on October 10th, and since then it's been two-sided inside the same boundaries. If that's how it felt to you, you're not imagining it. Welcome to Market Edge, ahead of the trade. I'm Owen, and today we're going to turn that noise into a plan. Here's how I handle weeks like this. First, I draw the box. The October 10th high and low are the hallway we're walking in. Until price leaves that hallway, I assume most moves are just swings from one wall to the other. That shift in mindset matters. It stops you from treating every bounce like a new trend and every fade like a breakdown. Inside that box, I do less and I risk less. If I take a trade, it has to start working quickly. If it doesn't, I'm out without debate. Small losses are the tuition you pay to stay sharp. Large losses are optional and we don't opt in. I also watch the tone of the bars. Late in a tired push, you'll often see highs creeping up by inches, price hugging the 8 EMA with no separation, and wider ranges that can't hold gains. That's emotion, chasing, then flinching. When I see that, I stop pressing. I let the market prove it, which leads to the final point. I don't try to predict the break. I let the break invite me in. The real trade starts when price steps out of the October 10th range with authority and volume, and that's when I expand position size from probe to meaningful. Until then, patience is a position. This is exactly why we start with sectors and indexes. They'll often tip the next rotation before the break is obvious. Let's check the ETFs and see where money is starting to cooperate.
Dow Jones Internet is just basing on the weekly and on the daily. It's a little sloppy here. It's kind of like a poster child for the market. Got a big tail bar here and here. It needs to take out these tops with volume, okay? And until it does, be a little careful with internet stocks. There we go. IBD 50 is trending nicely on the weekly. All right. Daily's trending nicely, but it's kind of sloppy up here now. Notice how trending and tight the patterns are here, the price bars. These are the things we teach at Mission Winners. It's what I taught at IBD meetups. Nice, tight consolidation patterns. Then it starts to get a little wild and wiggy right here. Large travel range bars. What does that indicate? Higher investor emotions. As I stated frequently, high investor emotions are mutually exclusive to sound decision making. That's not just true in the realm of investing, that's true in the realm of life. So this needs to settle down a little bit. And you can say, well, what group is this? Okay. Well, this is related to the innovator stocks, the cutting edge stocks. All right. So there we go. Continue onwards. Gold miners. Look at that beautiful simple base trend breakout here. And note the trend on the weekly. Note the trend on the daily. I say this all the time. And it's a fact. Trends pay more than all the decisions you'll make. Beautiful trends. We bought this back here on the weekly and the daily, and it's just trending. We've sold a little bit into strength. We sold some yesterday. Why? Look, it fell on a pretty big pickup in volume. It's quite extended in price, so you take some off. Accept this fact also. You're not going to sell at the top, okay? There's too much pressure to get the top. And besides, be pragmatic. We won't know it's the top until it's after it's posted at the top, right? So we get in line with what we can, we take what we can, and we're happy with it. And trends pay. We're still in some of this, a decent amount, and it's working. GLD, same situation. Note the base breakout here on the weekly. Note that trend. Here's the same line on the daily. That is serious money right there. Just trend. Continue onwards. Cybersecurity starts to lift up, but notice how it was trending, but then look at how sloppy and loose it got in here. Look at the wide range bars. Wide range bars are indicative, again, of high investor emotions. Oh, hey, I'm buying. Oh, it's getting weak, I'm selling. Oh, look, it's going again. Oh, wait, I'm selling. Be careful with that. Only the still pool reflects the water, reflects the stars. Focus on simplicity and it'll help you. Biotechnology is trending nicely, and it has for a while, right here and here, and you let it work. A little too extended to do anything with, but you can see the strength on the weekly chart. You can see the strength on the daily chart, rationale, reasons to buy it. Nothing to do with it right now. It's still fine. Online retail is a little sloppier here, as you can see down in here, whipping around, and it's below the 50-day. And this is a very simple investing maxim. you will find that by keying on things that are above a rising 50-day moving average line, you will dramatically improve your investing results. That is not an opinion. That is a quantifiable fact. There you go. That'll help you. That's why we started Mission Winners, is to help people. That's why I was an IBD co-leader for years, trying to help people. Here we go. Expanded technology. Still, they broke out here, but then look what it did. And then also notice, we studied price and volume reactions and actions. Notice how it was relatively tight, trending up here, and now it's dropping. And look at the price range bars. They're getting bigger. They're getting looser. Higher emotions there. This needs to settle down, okay? And until it does, be a little cautious with software technology. The trend is still up, but it's getting a little loose at this point in time. Continue onwards. Medicine, they need medicine, stay away. Done. That's it. It's below the fallen 50-day. Till it shows strength, leave it alone. I'll say this again to help you. If you narrow your focus and say, I'm going to focus on stocks, ETFs, etc., above a rising 50-day moving average line, you will improve your results. Fact. ITA, aerospace and defense, it's above the rising 50-day, but notice how it's gotten a little loose here. Notice how it was nice and tight, the price bars. Oh, bigger bar here, bigger bar here, big bar here, bigger bar here, okay? Be careful with that at this point in time. It's still trending up, but it needs to tighten up. Continue onwards. Home construction, there's nothing to do with it, leave it alone. S&P 500 growth still trending. Nice weekly trend. But then again, notice, nice daily trend, but it got a little loose here. Note the selling volume bars. Just tells you to be a little cautious, okay? Trend is still up. Small cap, trend is still up, but again, it's gotten a little loose just recently. Tells us just to back off a bit. IYR is just basing across here. You can see it on the weekly and the daily. This is U.S. real estate, okay? But even notice this, really whipping around here. Let it tighten up here, the consolidation patterns, okay? That'll help you. Transportation, it's lifted up here, and then they gave it right back. Heavy selling volume on that bar too. Until it tightens up and forms a cleaner pattern, be a little careful with transportation. Airlines below the 50-day, whipping around, needs to take out these tops across here. I'll draw this to help you. Needs to start taking out these tops. Until that happens, again, it's kind of whippy. Be cautious. Please note, by the way, I'm not being negative and I'm not being bearish. Gosh, no. I'm just pointing out what is. That's all. That helps us. No bias. Airlines, there we go. Same thing. Banking, look at that. Below the moving averages. Was falling here. Selling volume was coming into it. Rallies up, and then they take it right back down again. It's below the 50-day. Be careful with retail banking. With banking. There we go. Insurance. Yeah, they need insurance. There's nothing good about that right now. Leave it alone. And you can say, how did you say that so quickly? It's below the 50-day, and it fell on the weekly on heavy selling volume. Leave it alone. And you know what's powerful about that? We just narrowed our focus down dramatically, going through these indices, these ETFs, things to look into further, things to stay away from. Narrows your focus. I'd rather know 20 stocks really well than 100 stocks just so-so. That's why we do this in Mission to Winners. Regional banking, another one. Leave it alone. Mid-caps, chopping around here. It's a decent weekly base, but it needs to push up here. Also note, there's some selling. Look at the selling volume on this bar. Look at the selling volume on this bar. And the selling, they're selling. Okay, it's that simple. Until it starts showing some strength and taking out this line of these top bars, be careful with mid-cap stocks. Done. Oil services is sloppy there. Be careful with that one. Pharmaceuticals, forming a big cup with a handle here. It's above the rising 50-day. Support on the 21 EMA. It's nice to get some push through here, okay? Until it does, be cautious with it. And there's a low breakouts or a low level sell-off or buying power setup right here, breakout setup. But until it really starts to take out this top, be careful. Also notice, rallied up on heavy buying here. That's good on the weekly. I like that. Now you look at the daily, this is why we have weekly and daily. Oh, it looks good on the weekly. You narrow it down to the daily and you say, Oh, there was some heavy selling on that bar. On the weekly, you don't see it. On the daily, you do. And that is why, folks, right there, this is such a powerful template that I've used for decades. Weekly on the left, daily on the right. And I share it with you. By the way, I need to share this with you. Yeah, these are all tactics I've used forever. And I don't have, like, I bet he's got a bunch of tactics he doesn't tell us about. No, I'm not going to do that. That would be morally wrong. I don't know everything, that's for sure. Nobody does. But what I do know, I share. There we go. QLD, that's why I did the IBD meetups for years. QLD is just trending, but even notice, beautiful trend here, but then no, ooh, selling on this bar. Oops, some selling on this bar. See that? That's why we color code our price bars and volume bars. It helps us see trends much better. It's gotten a little loose here and still starts to take out this top across here. I'd be cautious. By the way, you can't catch me in a lie. I already got the price alert set, folks. You see that little green hash mark? Notice it's not at the high of that bar, it's near there. It starts to take off, that would be good. Notice I also have a lower alert set. Starts to take out these lows. Down here too, it'll be pushing down through the 50-day. Just says be a little careful. That's QLD, the NASDAQ 100, the big boys. Let's move on. Same thing's true with QQQ. Continue onward. Retail's a little sloppy here. Okay, a lot of gaps in here. Gapping up, gapping down. Be careful with the retail. It looks better than most, but until it takes out, and I'll do this to help you, until it takes out this line right here, be a little careful with retail. Also note, you want a good market too. Okay, the M and mission winners comes first for a reason, the markets. Cloud computing has a decent base across here. I'll draw this to help you, just to frame it up. There you go. Now, what do you notice about the chart? Well, it's kind of loose and whippy here, Pat. That thing goes up and they slam it down. Oh, it's going up. Didn't close that. Ooh, they slam it down. Runs up to that line. They take her down again. It's showing again lack of investor conviction. They're not staying with it. Well, if it's running up there, I'm getting the heck out. Okay. Until it pushes through these tops here, this line with volume, be careful with cloud computing ETF and or most likely the stocks in that group. Back to that. There we go. I think it's neat too. Cloud computing and their ticker symbols, SKYY. I think that's kind of cute. Let's move on. Silver and gold. Look at that trend. Is that a thing of beauty? I showed you the gold. There's silver too. Two precious metals. What does it tell us? Simple bases and run them. You don't have to understand why. Okay, although that's nice, just understanding the chart, price and volume action, and applying that knowledge is a great way to make money with much less stress and much less hassle. And it's just working. It's nice. And I showed you the gold we own. Steel's picking up and it's a little sloppy here. Look at this. Look at that reversal bar there, folks. Runs up, big reversal bar and heavy selling volume. They told you, they sold into it. Till this tightens up, be careful with steel. We're about done. Semiconductors. Now that's a nice base. A little loose here, but it's constructive. It's still above the rising ADMA. What would you look for on something like this? I brought this to help you. Got some tops right there. Take out these tops right there. It needs to do it. Push through those tops with a pickup in volume. There we go. But do note, there's some whippy action in this. It's not clean and tight. Look at how loose this is here versus the tight action here or here. Loose charts, again, are indicative of high investor emotions and lack of staying power. Hey, we're buying it. Oh, it's getting weak, I'm selling. Be careful with that. About done. Semiconductor, SOXL, another one, Direxion, loose just like SMH. Spiders kind of chopping around here. You can see though, just look, this is why I love studying price and volume. Oh, that's all right. Oh, look at this. Oh, it fell on heavy volume. Oh, quiet inside bar. Oh, it sold down on a heavier volume. Oh, look, it went up. But notice how it closed on this bar. It gaps up, it runs up, it reverses and closes below where it opened. It was met with selling. And then they take it down again on a pickup in volume. It's just chopping around. I've got a price alert set. Until this starts to lift above these tops on the spiders, be cautious with buying anything. SSO, same situation. Solar's picked up, but even hit. Oh, it's demonstrating strength. Then they take it down pretty hard too. But the trend is still up. Okay, so that's one to maybe look into, solar stocks. TNA, small caps, a little loose up there, be a little cautious. Uranium, rallied up, selling it down a bit. The trend is still up though, and that's fine. Okay, that's fine. No real clean entry on it right now, so be a little careful with uranium. If you own it, when you get a drop like this, when it's rallied up, you see that green bar? It gapped up, it ran up and closed below where it opened. After a big run, it's told you, it's kind of an exhaustion bar to a degree. What do you do with a situation like this? Again, it's telling you, oh, it's trending up nicely. Oh, it's gapping up. Great. Whoa. Oh, look, it's starting to fall. Oh, gosh, it closed below where it opened. Yeah, maybe I'll sell a little bit. Remember this. You're not going to get the top. You're not going to buy at the bottom. We're going to get what we can, and we're going to be happy. And that works. And also notice, all I'm doing right here, folks, is I'm looking at daily charts. I'm not micromanaging. Let's look at the 5-minute chart. Too much emotion in lesser time frames. USO, nothing there. Oil, be careful with. Aerospace and defense, kind of sloppy here. Until it shows some strength, be careful with aerospace and defense. Biotechnology has been trending nicely, and that's good. Involved with biotechnology. But notice here, oh, there's some selling volume on this bar. Oh, it's going back up. Oh, there's some selling volume on this bar. If it loses the ADMA, okay, with some volume coming into it, that would be a trigger to sell some. Loses the 21-day, that would be a trigger to sell some more. I am not saying it's going to happen, but here's the kicker, folks. Emission winners, we always have a plan. There it is. And again, I'm not forecasting. We just have a plan. Maybe it's going to go up. That'll be great too. It'll tell us what to do. Home builders, nothing there below the moving averages, leave it alone. I'll go back to this and you say, it's below the 50-day. Until it starts getting back above the 50-day, leave it alone. Done. Materials. How do you build houses? You need materials. No much power there. Be cautious with it. XLC communications needs to get a bounce off the 50-day. Okay. And you can see there's some distribution. There's some selling volume in there. Just be a little cautious. Energy. Yeah, they need energy. There's nothing good there. Leave energy alone. We haven't been involved in energy for a while. Why? It's told us not to. We don't have to forecast. Price and volume told us. Isn't that great? I love it. Financials, lag it here a little bit. Be cautious with this. It's not good, folks. This is a fact. Okay. Markets do better when financials are above the key moving averages. Right. So it's gotten a little loose here on some selling volume. I'd like to see this show some strength. There's something to be aware of. I'm not forecasting anything. I'm just stating a fact. Markets do better when financials are acting okay. There we go. Industrial's kind of loose. Be cautious. Technology's hanging in there. Okay. There's some selling here and here. The trend is still up. One thing we don't want to see XLK taking out the lows of these bars. You know what I'm going to do? I'm not even going to put a price alert on it. Here it is. I just placed a price alert. Not at the low of that bar, a little bit above it. Starts to take that out. I'd get a little bit more concerned about a lot of stocks. There we go. Consumer staples, there's nothing really great going on there. Leave it alone. Utilities are trending nicely. Isn't that neat? Gosh, yeah, they're interest rate sensitive. And you know what else they are? They're kind of a defensive group, aren't they? They're utilities. That's connecting the dots. Defensive, not growth related. Healthcare, hanging in okay, not too bad. XLY, consumer discretionary, kind of sloppy, hanging in okay. Metals and mining, do a compare and contrast. Well, it's kind of going up. It's chopping around here. You go to the next one and go, whoa, what a trend. Yeah, metals and mining. That's why we've been involved in some of these areas. It's been telling you, get involved with me. There we go. I'm not saying, oh, we owned this one. I'd have to double check to make sure. I don't know if we did or not. I'm not going to lie to you if I don't do that. But you can see education. Note the trend of the ADMA. That is making money with no hassle. There you go. Now, a little bit of selling coming into it here. Don't buy it up here. There's no clean entry here. Wait for your pitch. XOP, oil and gas, stay away. Retailing, kind of sloppy, be cautious with it. Software, nice base on the weekly. Notice how it's getting a little choppy here on the daily. Look at these price range bars, whipping back. Oh, it's going, they take it down. Oh, it's gapped up. Wow, this is it. Oh, gee whiz. Oh, it's gapping up again. Oh, they took it down. Big tug of war between buyers and sellers until this takes out This is software related for everybody. Still starts to take that out with volume. Be a little cautious with software. Let's move on to the stocks. MAXLIST, Apple. Note this little shelf that based right here, coming across here, and we combine price and volume. And I'm going to make this bigger to show you something. You can say down on heavy volume, meandering back and forth, and then it starts to pick up Friday on a slight pickup in volume, pushing through the 21 EMA and the 8 EMA. That's the 21 exponential moving average and the 8-period exponential moving average. Pushing through it on a slight pickup in volume. Price alert set. Okay, own it. We may buy more. Now, this is not a long base breakout, therefore it's riskier. How do we control risk if we buy something like that? If we buy, you go smaller. I'm going to share this. I'm big on this, folks. I'm big on making money. I'm big and also controlling risk, lessening risk. Go bigger on simple base breakouts. Buy more shares on simple base breakouts. Buy less shares on patterns that are not as reliable. That'll really help you. I know it was a long discussion, but you know what? You're worth it. That's why I'm doing it. That's why we do mission winners. So there's Apple. Takes out these tops, we'll buy more. Let's move on. Amazon. You think we own it? No. Why? It's below the 50-day. There's distribution coming in here. Look at the red selling volume bars. Look at the weekly. Look at the selling volume bars. This is ahead of an accumulation week for 4 weeks. So for what? Now, am I saying it's over? I'm not saying it's over. I'm just saying at this point in time, there's really nothing to do with it. So we just wait. Also, another very important observation to help you. It's below the 50-day. It's below the falling 50-day. We need to see some power for us to get interested in it. Very simple statement, fact. The air is better above a rising 50-day moving average line. We need to see that start to push. There we go. And it might do it next week. It might start taking out these lows in reverse and take off like the rockets red glare. We'll see. One thing I will say, though, there's some selling volume on that bar. Tells you to be a little cautious. There we go. And again, you go back to the weekly. I see 4 weeks of selling. Tells you, again, be a little cautious. And we're not involved with. We don't own it. And you can say, same with AMZU. I mean, go back to it. Why own it? It's below the moving averages. Leave it alone. AMZU, you can do Alibaba. See this nice long base breakout on the weekly? See the volume that came into that right there? We bought that right there. We'll call it 126, 127. All the way up to over 190. What a monster run. That's the weekly. Look at the daily. I'll shrink this to show you. Look at that nice long base. Look at the volume pickup on that bar. I should say, please look at the volume pickup on that bar. Check that out, man. They bought it. You know what I call that? That's a trigger right there. You know what kind of move is? That's sweet potato pie. That's it. That's the 8-period exponential moving average. Look at that trend. We own this the whole way. Oh, God, we got to sell it. Why? Why? Let it work. Let price mixed with volume, but primarily price, guide your decision making. It will really help you make more money. It will also do it in a way that has less stress associated with it. So that looks good. We'll let it work. And you make this a little bigger so it's easier to see. Now, look at what it's doing right now. Fell on heavy volume. Now it's just basing right here. See the volume spike on this bar? And then nothing, and then a slight volume pickup on this bar. See these takes out these tops? That could be a buy. Can't catch me in a lie, by the way. Look, I've already got the price alert set. I'm doing this on a Saturday. I had that baby set yesterday. Didn't trigger yesterday, but we'll watch it and see. I'm not saying it's going to break out, but I am saying this. We're always prepared. There we go. Baidu's not doing as well. Okay, I mean, go back here, right? Hovering around the 21 EMA. Baidu, below the 21 EMA. Now, what could we see here? Well, it's going to need some real power and push through the 21 EMA. If it does, hey, that could be a buy. Yeah, we had Baidu. Nice. Let's move on. Google, base breakout here, base breakout here. Base across these tops right here. Volume's coming into it. We own some. If it continues going up, guess what? I already have the price alert set. Got a lower alert set and an upper alert, not stops, alerts. This starts to push. What do? Hey, we'll be ready to buy or buy more. This could be a new buy or a buy. But I must stress, for a new buy, this is important. It needs to take out the tops of this bar with volume. What's one slight negative? I'm going to make this bigger to help you. It gapped up. It ran up and it closed below where it opened. You see the open and the close right here, those two hash marks? Indicates there was selling there, okay? So what do we need to do? Again, take out these tops here with volume. Let's move on. Goldman Sachs, there's nothing good there, leave it alone. MasterCard, there's nothing there, leave it alone. I mean, it's below the fallen 50-day, there's nothing to do with it. Why? What? This is important. Time is a very valuable commodity. Do you ever think about that? We all have the same amount of time, but what separates winners from people that are not doing as well? They're not using their time wisely. I'm not criticizing anybody. I'm all saying we all have 24 hours in a day. Nobody has more. Man, let's use it wisely. That's why we started Mission Winners, to help people speed up that curve to make money. Meta, chopping around here below the 50-day. Here's a very simple investing maxim. I'm going to say it again. The air is better above a rising 50-day moving average line. Right now it's below it. Until it starts showing some power, just look for better fish to fry. That's simple. FBL, that's the 1.5 times Meta, same situation. Microsoft started to lift off this downward sloping trend line right here on decent volume. Then they gave it back. It's chopping around here. Until it starts showing some power, I'm going to be a little cautious. Now, this is the 50-day right here. Could it bounce off of here? Possibly. I already have a price alert set. You see that right there, that little green hash mark? It's not a stop, it's an alert. Starts to take this out, be good. What's one thing that's positive? It gapped down on Friday, it fell, and it closed in the top third of its range on a pickup in volume. And it found support on the green moving average, which is the 50-day. There we go. Something to watch. Not a simple break, not a very simple break entry, but a viable one. Netflix, there's nothing really to do with it at this point in time. Leave it alone. By the way, there's a weekly chart. You see that base breakout right there back in April? Pick this up. We'll call it 1,010. 1,010 up to 1,340. Now that's selling at the top. I'll just say 1,010 to 1,310. How about that? That's well off those highs. That's 300 points. Yeah, we own that. I'm not bragging. I'm trying to show what works. And it does work. And beautiful part, simple entry, price is good above the line and bad below, helps you also control risk and keep losses relatively small. And that's good for the head and good for the pocketbook. Nvidia starts to lift up here, runs up, and then it starts getting sloppy here. We owned some here and we sold those shares when it started to lose the pivot because it was doing it on heavy volume, heavy selling volume. We still own some from down here, and from those, we're in good shape. We've sold some into strength. We're in good shape. There we are. What do I want to see? Potential setup. See this bounce off the 50-day? That's the green moving average. It needs to take out these highs, and it needs to do it with volume. Why? It needs to take out the highs of these bars. Show you, I'm going to be very specific right here. The high on this bar, and again, I try to do this in a way that helps you. It needs to take out the tops of these bars right there with volume. So what do? I'm doing this on a Saturday morning. We'll do it in real time. Right there. Needs to do that. It needs to do it with volume. We'll be ready. There we go. Also, if it does that, what else is it doing? It's not just taking out the tops of these two bars. It's pushing off the 50-day moving average line, which is that green moving average. See, now we've got two things potentially working for us. Institutions use that 50-day moving average line. Let me tell you, we do too. There we go. NVDL, the leverage one, same situation. Tesla, I like this base right here on Tesla. By the way, be aware, some of these stocks may have earnings coming out, folks. Know those earnings dates. Please know those earnings dates. And I'm going to say this. Please be careful buying just before earnings. Please. You go, God, Pat, I might miss a really big gap up. And I'll say, yes, but you'll also miss a big gap down. And you don't want that. That's bad for the head, and it's bad for the pocketbook. Okay, we don't do things that will rattle you. It's what kept me in the game forever. So anyway, this is basically nicely something to watch going forward. TSLL, same situation. Here's a beautiful thing. This is Tesla Common. This is the derivative of the Direxion. But notice the pattern. It's the same pattern. Look at the price and volume bars. And then you go here. Yeah, it's the same price and volume bars. Same base pattern here on the 21 EMA. Take this out with volume. Why am I pointing this out? Well, you can buy Tesla at $430, $440 a share, right? Or you could buy TSLL for around 20, 21 bucks. Isn't that neat? Most people don't know that. I share that with you. There we go. And then Visa, it's everywhere you don't want to be right now. There's nothing to do with it at this time. You just have to leave it alone. There we go. This is another one I just stuck in here, Dell. This could be a MAXLIST stock.
That wraps up today's episode. Huge thanks to Pat Walker for another deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to Mission Winners on YouTube, check out missionwinners.com, and stay sharp out there. Master your strategy, trust the process, and maintain your edge.
The charts will rise, the charts will fall. Don't lose your head, don't risk it all. Every trade's another test. Keep your cool, trust your best. Stay safe out there, keep your line tight. Risk first, always do it right. You don't need luck, just do the math. Be smart, stay true, stay on your path. Storms may come, but you'll stand tall. You don't win if you chase it all. Play your edge, don't lose your way. Live to trade another day. Be smart, stay safe, stay on your path. Be smart, stay safe.